It's year end. People are spending to shopping and traveling to overseas, while you are intending or have done either one or both of the activities. Your teacher, Mr. Tan, is not doing any of these and is tax saving for his retirement through SRS without sharing. Bad teacher. Before we start, do like and subscribe to my channel. So what is Supplementary Retirement Scheme? It is a voluntary scheme that is catered for retirement savings above their CPF savings. SRS contributions are eligible for tax relief. As we know, CPF is applicable for both Singaporeans and Singapore permanent residents only, while SRS is eligible for foreigners as well, with the 4 criteria shown. Take note that you can only have one SRS account at any one point. It is an offense and there will be penalties for having more than one SRS account with more than one operator. Don't say Jamie never warned you. How to open SRS account? SRS account is managed by our 3 local banks, so you can visit one of their websites to open an SRS account via online. Required documents will be your IC or passport and an additional SRS declaration form for foreigners. To be eligible for the SRS tax relief for the following year, all SRS contributions must be made by 31st December of the year. Here's an illustration on Mr. Tan, who is a local resident making SRS contributions. For every dollar contributed through SRS, we'll reduce the chargeable income by every dollar. SRS maximum contribution for local and PR is $15,300. For foreigners is $35,700. So, the agent bank will assist you to provide the information to IRAS, where in such case, for Mr. Tan, the $12,000 SRS contribution will form part of the maximum $80,000 personal tax relief. This table shows the resident tax rates, and from 2024 onwards, notice the difference for annual income 200k and above compared to the 2017 table. On employment income for non-residents, a flat rate of 15% or the progressive resident tax rates, whichever is higher. For example, Mr. Tan chargeable income for this year is 120k and gross tax payable will be $7,950 without SRS contributions. By contributing $12,000 to his SRS account, his chargeable income will be reduced to $108,000 and the gross tax payable will be $6,570. For first $80,000, gross taxable will be $3,350. Next $40,000 will be 11.5% of rest of the chargeable income under the bracket. For Mr. Tan case, rest is 28,000 chargeable income times 11.5%, which is equals to $3,220. So adding together, the gross tax payable after Mr. Tan SRS contributions will be $3,350 plus $3,220, which is $6,570. The tax savings in this case will be $1,380, which Mr. Tan can save up for a Taiwan trip next year. It is best advisable to seek a professional tax advisor regarding tax matters, as each person's situation is different. How can you invest in your SRS account? By putting in funds into your SRS account effectively earns you only 0.05%. Right now, interest rates are rising and most of the banks are offering attractive rates for their savings account and fixed deposits. So, to effectively utilize your SRS funds, there are investment products that can grow your SRS funds rather than putting it in the account to earn the 0.05%. Take note that all investment products comes with risks. So let's take a look at how people have utilized their SRS funds for the past 10 years. We can see from the past decade, there's definitely an increase in the number of SRS accounts, particularly for the past 2 years, where people have more time to think of their financials due to the pandemic. The largest pie of the SRS investment portfolio, as we can see from here, are shares, REITs, and yes, This means you can link your brokerage trading account to the SRS account to trade in these shares using your SRS. To withdraw SRS funds, you need to know the retirement age. Why? Unless you want to pay more money by withdrawing before the retirement age. The retirement age in Singapore is 63 years old. You should withdraw your SRS funds at the age of 63 and after. If not, 100% of the withdrawal sum will be taxable with an additional 5% penalty fee. There's also a 10-year window period once you start the penalty-free withdrawal at retirement age. There's no U-turn, and you cannot stop and start again as and when you like. This example is provided by IRAS as shown. If you have 400k in your SRS account and you withdraw on the retirement age of 63, by spreading 40,000 withdrawal each year for a period of 10 years, 50% of the withdrawal sum is taxable, which is 20,000. Based on the tax rates, the first 20,000 will be effectively no tax. Then another example shows you the full withdrawal amount taxable and penalty charge if you withdraw before the retirement age. And the table shows the age where you withdraw before the retirement age. Spreading the same $40,000 withdrawal each year for a period of 10 years, 100% of the withdrawal sum is taxable before the retirement age, which is $40,000 plus a 5% penalty fee of withdrawal sum, which is $2,000. Hence, you must plan your financials properly before contributing or withdrawing from the SRS account. SRS is one of the tools that helps you to save taxes and retirement planning at the same time. SRS also allows most forms of investment except property investment to generate potential higher returns. Under special conditions, the SRS account holder will be able to withdraw the SRS funds without penalty, be it in the form of cash or investments. They say time in the market is more important than timing the market, and when it comes to SRS, both will be equally important, as you do not want to encounter problems where your investments are so large that you will get taxed a huge amount when you start withdrawing, and investing too much of your spare funds into SRS account for tax savings and neglecting the part of liquidity where you need it when recession hits, which could happen soon. You will get penalty for early withdrawal. With that, once again, do like and subscribe to my channel, and I shall see you again. Adios.